Good morning. It's Tuesday, February 3rd, 8:43 a.m. Have a daughter that's turning 18 today, so it's a special day. Always February 3rd, day after Groundhog Day this year. Like I said yesterday, I love that movie. Some of the guys and gals sent me some quotes and screenshots, and I didn't get a chance to watch it, but I'm going to try to watch Groundhog Day this week. Um, in this episode, I'm going to be talking about market mechanics and what we've seen with the squeezes and then the sell offs in silver, gold, memory stocks, and natural gas. I want to talk about U.S. manufacturing data and then the payment stocks. So, just jumping right in, we've seen a lot of squeezes up, obviously in silver, gold, um, the semiconductors and memory stocks in particular, natural gas. Part of that is when investors are buying call options, the mechanics of the market dictate that the underlying market makers then have to buy the stock to hedge against those calls that are bought. And then when investors, like on Friday, unwind, they sell the calls, then the market makers sell the corresponding stock that they had used to hedge. So you get these wild volatility surges. And, we've seen that. And it's interesting. I mean, I'll get to this a little bit more, but silver is up actually 15% as I'm recording this morning. Gold's up 6.6%. You know, you saw we saw tremendous volatility in natural gas yesterday. Part of that was there was some optimism that had been baked in, and you got speculators on the long side, and then you get the unwinds, and you get the bounce backs. The memory stock index actually bounced a lot yesterday after selling off, on Friday, giving up all of its pre-market gains almost, and then coming back to negative and then bouncing. But it's been up yesterday than today. The Nikkei was actually up 3.9% last night, and it's been driven by the memory stocks there, the semiconductor shares, as well as a weaker yen, which benefits their exporters. Um, And on that note, it's not just Japan that it's benefiting here. Their manufacturing sector. The U.S. had robust manufacturing data yesterday, and I know Aaron Turbo talked about it in the economics channel of our chat. But the PMI in the U.S. went from 47.9 in December of 25 to 52.6. That was actually a 41-month high, and as we talked about uh, that leading manufacturing index, the Dodge index, it has led this upturn in manufacturing, which it is signaling that we're going to have a further upturn in the manufacturing sector. So that's obviously been good for base metal prices, copper, aluminum, steel, and it's one of the engines that's driving the market right now. There's a broadening of breadth in the U.S. market, because tech had led for 23, 24, 25. You're still getting, the semiconductors, obviously an engine in the tech sector. So you're still, getting appreciation in technology shares, but that's broadened out from just the top 15 stocks or so. And, but, the economic data picking up both, in the U.S. and, around the world is reviving the commodity sector. It's reviving, some of the small cap stocks, which we've seen small cap stock outperformance this year, and the mid cap stocks as well. Palantir reported last night. They're actually up 11%. PayPal had earnings this morning, I believe. They're down. They had a new CEO, and it. We've been talking about the payment stocks quite a bit. In our group, I had bought PayPal for the FAMDCA portfolio, which if I could go back in time, to Friday, I would buy something different because it sold off on the earnings slight miss and then the CEO replacement today. Kay, hopeful guy, he had a nice post I just wanted to read on global payments, which is another one that I've looked at. I've actually owned this a long time ago. I don't own it right now, but he likes that in comparison to PayPal or Four. He wrote a note, and I'm just going to read it, verbatim. I want to read that exchange because I thought it was really good. So He wrote it February 2nd. He said, I wanted to collect my thoughts on uh, global payments versus PayPal. Although they are in the same payment sector, their business models are going to be very different, especially because global payments has sold off its issuer business. GPN is aiming to be the largest merchant acquirer in the world by integrating with WorldPay. Although this segmentation is under threat by someone like Stripe, MAs are not going to go away anytime soon because they provide complex plumbing for very large merchants. Moreover, Global Payments has one of the largest POS systems. If you go into Europe and you see these wireless payment systems, I saw that this summer, those are most likely GPN, making their products very sticky. PayPal, on the other hand, is an issuer business, meaning they have to consistently fight to make themselves relevant to their consumers. It's a cash flow machine, as you know, and I think it can stay relevant, but it's under a lot of pressure, as you know, from competitors such as ShopPay, Google Pay, and Apple Pay. Too long didn't read. I'm betting that the merchant acquirer space stays more sticky, i.e., business to business, and stable for the next few years. And I think that global payments can continue to print cash. And I'm crossing my fingers that global payments can significantly or successfully integrate with WorldPay. I then responded. My immediate thought upon reading that it says, "Hopeful guy, this is really good, and it's making me reconsider PayPal over global payments." PayPal set to report earnings here shortly, so we'll get another check-in. And then obviously they missed, and they're down this morning. But I think it's more the CEO replacement, and there's a question about their overall strategy because PayPal has been cheap for a while. They are generating a healthy free cash flow yield. They're buying back stock. It's a good starting valuation, which is all things you look for in a potential compounder. Uh, Anderson said, and Turbo said though, what happens if revenue growth stalls? That could be a problem. Speaking of Aaron or Turbo, in our thread here, he said, hopeful guy, that is similar to my reasoning with choosing Four over PayPal. Remember, Four is the one that Michael Burry really dug into in his piece. Burry was waiting for Four to kind of go in half even more, but he admittedly said that, hey, it may never get there. I'm a value guy. It's kind of my dream scenario. So Turbo says, how do you compare global payments versus Four? Four, a likely competitor to global payments now that they are entering Europe. I wasn't aware GPN was in point of service POS. Hopeful guy says, I would say Four and GPN are competitors for certain sectors with different strategies. Four is trying to consolidate the payment plus CRM plus inventory all into a great software to create a moat for itself in certain critical industries. They bought Global Blue, which demonstrates their desire to really break into the luxury retail space. They are doing really well in hospitalities, restaurants, and as you know, growing very quickly. GPN is trying to protect the traditional value chain plus moat by becoming the biggest merchant acquirer in the world. They can rely on the huge volume play. They processed almost $4 trillion in payments last year. Their most profitable customers are large-scale hospitals, multi-location restaurant groups, universities, multinational retailers that have thousands of billing codes. They are, however, losing customers in the simpler SMB space to Toast, Shopify, etc. Global Payments is in POS software through partnerships. When you see those wireless credit card machines in Europe, they were probably made by Ingenico, but issued by a large European bank that uses GPN software to process the payments. European banks, by the way, we had an incredible run last year with Deutsche Bank and Santander and Barclays. Really, the banks in general. I wrote a piece on Seeking Alpha about you would rather own Wells Fargo than a lot of the popular real estate stocks, 3, 4 years ago. And that's played out. The banking sector, including Wells Fargo, Citigroup, JP Morgan's done really well. The big banks have done well. European banks have done really well. Sorry for that interlude. Back to hopeful guys' concluding thoughts. So I think if you invest in GPN, if you think it can survive the onslaught of these tech-first competitors through existing scale and profitability, their gross margins are 60% plus. Regardless, I think both, so he's talking about GPN and Ford, will benefit from the rising global consumer spending. I mean, summarizing that, I actually, if I could go back in time, I would buy GPN then Ford then PayPal, which I'll have to, reorganize in my family safe purchases the next batch. I'm not regretting having PayPal here. I still like the combination of a compelling starting valuation, it's a known business that's generating a healthy free cash flow yield. I calculated it, close to 10%. That's come down, or going up with the stock price coming down. And then they're buying back stock, which is good. So, um, bigger picture, if in summarizing, economic growth is better than expected, around the world, particularly in the U.S., and the manufacturing sector is reviving. Um, that's a welcome tide, because part of the reason what's happened in the stock market, is we've had, you see like the Buffett indicator, which says the, the market cap to GDP ratios are really extended, but you've had, investors that have crowded into the top 15 or so, technology oriented stocks, because you've had a lack of growth in the real economy. You're starting to see that change now. And the stock market breadth is widening. The commodity sector is reviving. The value sector is reviving as well. And the economic data is now starting to confirm that, with the latest readings. So hopefully everybody has a good Tuesday, February 3rd. I believe that's Tuesday, February 3rd. Um, thankful, grateful for all in the group. Appreciate the debate, the dialogue, and the discussion. I learn a lot, as I'm sure you guys do too. So thankful for that. Have a great day, guys.